What are the three types of income and how many income streams you should have? Stay tuned and make sure you smash that like button. Subscribe to this channel for more videos. Let's jump into it. Hey, my name is Leonard Wote, and today we will be talking about the three types of income and how many income streams you should be having. We have the earned income, the portfolio income, and the passive income. The earned income is the income from your regular job, your 9-to-5 job, where you work for someone or you work for a company and they pay you every 2 weeks or they pay you monthly. And this income is highly taxed by the federal government and the state government. So the federal government usually tax between 10 to 37% of this earned income. And in a state like Maryland also tax like 6%. So if you add the federal 37% plus the 6% tax, it's like 43% plus. So when you work, 43 plus or 45% is being deducted from your paycheck as tax. So you only end up with like 50, maybe 55% or 50% of the earned income. So majority of people, they fall under this category where they work for people or they work for companies and they receive the earned income, and it's highly taxed. That's why when you receive your paycheck is like $4,000 and what actually hits your account is like $2,000 something. So that is the earned income. The next one is a portfolio income. A portfolio income is when you sell maybe a house and you make capital gain, or when you buy stock and increases in value and you sell them and you make that profit. So for example, you can buy an ugly house for like maybe $100,000 and you put in like $50,000 inside, and maybe you sell it for like $300,000. You make a profit of maybe $150,000. And that is capital gain. So that is portfolio income. Or you can buy stocks or bitcoins when they are low, and when they increase in value, or when they go up, then you sell them and you make profit. Or you buy something and sell and you make capital gain. Those are called the portfolio income, and those are being taxed around 20%. They are taxed lower than the earned income. The next one is the passive income. This is one of the best. So passive income is like when you buy an apartment. Let me say an apartment because I love investing in apartment buildings. So you can buy an apartment and you have tenants there that they pay you rent every month. And when they pay you rent, you collect the income, you have expenses that you take care of, and then you have cash flow every month. Yeah, let's say for example, you have 100 unit and you collect $100,000 every month from the tenants. And you have expenses like $50,000, and maybe you have the mortgage for like maybe $20,000 or $30,000, and then your cash flow is $30,000 every month. So that is passive income. So this is something you do one time and you keep getting income over and over. Or you have a business where people subscribe and they pay monthly fee every month, like Netflix or Amazon Prime, where people pay money to those companies every month. So those are passive income. So you do something one time and you keep getting cash flow every month, over and over and over and over and over. So that is passive income, and that is one of the best income. And if you are very smart in it, especially in real estate, you don't pay zero taxes, because there's something that you call depreciation. When you buy real estate apartment building, you can depreciate that for 27 years and write off taxes for everything. So that you make money out of it every month, but you pay zero taxes if you are very smart about it. So if you ask me which is the best, I'm gonna say passive income is the best income. But first, earned income is what everybody starts with. Like, I migrated into the United States, and you have to start somewhere. So you start with the earned income, you work with someone. Earned income is not a bad thing, it's a very good thing. It just depends how you use it. Start with the earned income and use that money to invest it in assets that is going to produce a passive income that you can write off. So that if you lose your job, you should be able to have something that is going to back you up. I'm not saying that paying taxes is a bad thing. No, paying taxes is your responsibility as a citizen. So you have to pay that tax so that the government can use it to run the country. But if there is a legal way where you can pay less taxes instead of paying more, then why don't you use the legal way? Why don't you learn how to do that and use it instead of paying more where you can pay less? So that takes me to how many stream of income you should have. For me, I don't think that you should have only one stream of income. If you have your job, let me say you have your IT job or your nursing job, or maybe any job that you have which you're getting any income from it, and let's say for example something happened and you lose that job, then you don't have any more stream of income, then you're broke. But if you have multiple stream of income, if this one stops, then the other one is going to be giving you money. Let's say you have any income and you take that money and you invest it in income producing assets like apartment or maybe any other business that gives you money every month. And if you maybe have a problem with your job and you don't have a job anymore, you're still going to be having income over here. Let's say you buy the first apartment, it's giving you income. You buy the second one, it's giving you income. You buy the third one, you buy the fourth one, you buy the fifth one. If something happened with the first one, you're still going to have the other apartments that are going to be giving you money. Or maybe businesses, maybe you have franchises that you bought, maybe McDonald's or maybe 7-Eleven or something like that. You have multiple of them. So when one has a problem, guess what? You still have income from the other one. So it's always good to have multiple stream of income. Don't only depend on your earned income, because something can happen and you will not be able to pay your bills or be able to run your life because you just have one stream of income. Most people always start with earned income and they take that earned income and invest it in other businesses or they invest it in assets. And there's a point where their assets are producing more money than even what they are making with their earned income, and then they give up their jobs and focus on their businesses, and then they grow from there. So you want to have that employer mindset. You don't want to have only the employee mindset, because when you have that employer mindset, it makes you to think more. You have a different source of income, and you don't depend only on the work that you're doing every day. So those are the three types of income: the earned income, the portfolio income, and the passive income. And my best is the passive income. Thanks for listening, and make sure you smash that like button, subscribe to this channel for more videos about real estate and how you can be smart with your income. Let's go, baby. Boom.